We're very happy to be here today with you guys for our webinar on a case study on doing Roth conversions for a pre-retiree client that I have. So today we're going to be diving deep and looking at all the different ways we can really leverage RightCapital as a tool to have a nice visual backdrop for the conversation regarding Roth conversions, but also how we can make some informed decisions utilizing RightCapital and all the various tools that we have within the system to really look into the details and also at the high level of what Roth conversions make sense for a client, and also considering the bigger picture for clients and what their needs are throughout retirement and just their lifetime in general. And so we have a lot of content we want to get through today. So to just go over what we're going to be discussing throughout this presentation, we are going to be looking at, of course, modeling and analyzing Roth conversion scenarios on our pre-retiree sample. We're also going to highlight the ways you can enter backdoor Roth scenarios into a plan as well. We're also going to kind of go over how you can really leverage all the various tools within RightCapital for creating a nice presentation flow and having a smooth narrative when you are presenting within RightCapital and using RightCapital to highlight the conversation regarding Roth conversions in the various tax-free aspects of potential Roth scenarios in specific. And of course, if you have any questions throughout the presentation, please feel free to navigate to the questions menu drop down and just input your questions there, and I'll be sure to answer any questions you might have. But I'm looking forward to this really interactive presentation, and if you've got any questions, like I said, I'll try to answer them at the end of the presentation, but we got a lot of content to get through. So shifting gears to RightCapital, today we are going to be looking at the Scott family plan in specific. And so one of the first places that we're going to go is going to be under their profile section under blueprint, and we're going to take a look at where they stand today. So just some backstory about the sample client plan, this pre-retiree family. The Scott family, they currently have a net worth of $2.089 million, including some 401ks, as we can see here. We have some bank accounts, a brokerage, and we have some 529s because they do have children. They've got 2 children, and they're in their mid-50s. We are also including their primary home of $850,000, and they do have some existing debt and another property as well. Their future goals, so they are prioritizing paying for their children's college. Their kids are currently in college and slowly starting to trickle out of college, so we've got that expense going on right now. And then we have them retiring at 67 respectively. And we also want to see them achieve their dream of downsizing when they retire and moving to Vermont. So this is going to be the backstory for the sample plan. Right now, they currently have got a combined salary of $275,000. We're factoring in Social Security, and we have some some 401k savings occurring, and they're pretty avid savers, but they do want to look at taking advantage of some Roth conversions for them in specific because they are really prioritizing leaving a lot of assets in tax-free dollars. They're really concerned about what's going on with their children and what they'll inherit when they pass away. Their priority is going to be looking at, what they can really provide in tax-free dollars and lessen the burden when they pass away for their children in terms of paying taxes. So that's just some of the backstory and of the Scott family plan and where they stand today. If we want to dive into it, just so we get a little bit of a picture of what they currently look like, their property success right now is at 91%, considering all of their goals, everything like that. But for them in specific, we really want to look at one of the main ways we can model Roth conversions within the system. We do have a tool that is focused on performing Roth conversions. And so with the Scotts, they have a couple different pain points that we address. They want to look at all the different things that might assist them in achieving their goal. And we want to make sure that we're providing all the different routes. So what we're going to be modeling is the different ways we can see Roth conversions and what makes sense for the Scotts, and also to have that conversation of what path they're more comfortable pursuing. But also, as you can see, we can, in the tax distribution module, this is where you can have one of those conversations or have a nice visual backdrop for that conversation regarding looking at one of the main tools of RightCapital of modeling Roth conversions. And so in this tool, if we navigate down to the calibration tab and into the action items, this is where we can start to play around with modeling Roth conversions. And so in the action items, what we can do is we can model filling out the tax bracket. As you can see, if we don't fill up the tax bracket, we're not going to be performing Roth conversions. But if we model back up to the 24-28%, we can see the impacts here. And if they were comfortable with going up a little bit higher, we can see how that would impact their tax adjusted ending portfolio value. But let's say for them, they're only comfortable going up to the 24-28%. We had that conversation with the client. They're comfortable paying more in taxes and they're comfortable staying in that 24-28% tax bracket where applicable. And so you can see that impact. We can see, you know, we have the difference here of this is their adjusted income with the conversions over time versus the adjusted income without conversions. We can see there's a lot of drops and then a sharp increase later on in life. So you can see that kind of bracket comparison. But we can also view under the comparisons tab here a really nice visual side-by-side comparison of the tax adjusted ending wealth value, that pure number, but also more importantly for their main concern about leaving money tax-free for their heirs. We can see that we have 100% in tax-free if we follow this Roth conversion strategy, versus if we don't pursue these Roth conversions, we're only going to have 5% tax-free, the majority in taxable accounts and then tax deferred. And so you can see this nice visual comparison. Some of the other very strong visuals within this module specifically is that we can also view this side-by-side comparison of the federal taxes paid between them pursuing these Roth conversions versus them not. And so as we can see, if they don't do the Roth conversions, they are paying more in taxes overall. They have some deep spikes later on in life compared to if they do these Roth conversions, and it's a little bit smoother for them. We can also view the difference between RMDs. And so for them, because they're converting everything prior to RMD age, we're not seeing RMDs occur with the proposed strategy, versus if they do not do Roth conversions, they are going to be subject to RMDs. And we can see this hefty amount right here. Also going to be a factor that's contributing to that higher tax payment probably as well. We can also view a side-by-side chart comparison of the account balances over time. We can see the steady growth of the tax-free account versus them not doing Roth conversions. It's a very small sliver on the chart. And we can also view the withdrawals across accounts as well. As we can see, they do have a long-term care event, so that's why we're seeing some sparks here and some upticks in withdrawals and in the income, taxable income in the later years of life. That's because we have some long-term care kicking on. But that's just some of the things that we can view here in terms of those side-by-side comparisons. We can also view under the details tab a lot more granular level detail of specifically what dollar amount is being converted. This can be a very powerful tool to look at here. So especially for this instance in which we want to offer the Scots all of the possible paths to allow them to choose what makes them feel most comfortable. Here under the details tab, we can see that if they wanted to do those Roth conversions up to that 24-28% bracket, we can see what dollar amount they would be converting each year to achieve that. And we can see that occurring over time. They're stopping in 2038 Roth conversions. We can see that they're doing a little bit higher in their earlier years, and then it lessens and then it increases later on. This is a good place to kind of check in to see if we wanted to take this information. We can model some manual Roth conversions that we specify the dollar amount of conversions. So if we see this figure specifically, we can take these amounts and say that we see that there's roughly, 100,000 in the first couple of years, and then there's around 20,000 for another decade, and then it increases later on. We can take this information and we can use this later. But one thing that I'm noticing, so for example, if these clients are not comfortable doing Roth conversions after Michael is age 70, we can definitely specify this so that we are achieving their conversation and their agreement. So with the Scots, they did say that they have a preference for when they don't do Roth conversions. So we can go down into the action items and click on the edit button. We can click on conversions end, and we can specify that we don't want to have Roth conversions occur past a certain point in time. But let's say it's going to be for Michael's age. We'll say at age 70. because that was the parameter that they said that they don't feel comfortable once they're a little bit older, once they're filing for Social Security, they don't want to be necessarily pursuing Roth conversions at that point. So we can incorporate that into this proposal by just going back into the edit button and then selecting conversions end and hitting save. And so we can see it adjusted a little bit, but when we go back into details, we're going to see that it stops when Michael is 70. So now we're going to be accounting for their preference here, and we can still see that conversion amount. So it's one of the tools that we can utilize to really make this a personal approach when modeling these sorts of Roth conversions and filling up the tax brackets in this way. But taking this information, looking at the details tab, they do feel comfortable going up to 24, 28%, but let's give them some alternatives. So let's take, they're comfortable with a 24, 28%, and they can do Roth conversions for 140,000 the first couple of years, it looks like. So let's model that and see how that impacts their plan. If we go into the retirement module and into analysis, let's go to our manual Roth conversion strategy. We can start to incorporate all of our different proposals here. And so right now we are going to be modeling the manual Roth conversions, and we want to look at how it will impact their plan if we pursue some manual Roth conversions here. So in the action items for this plan in specific, we're going to click on the edit button, and we're going to click on add new items, and then income distribution. And so this distribution card is another fantastic and versatile card. This can model just normal distributions, but this is also what we can utilize to model Roth conversions as well. And so this is helpful for when we are trying to get a little bit more nuance when we are trying to model Roth conversions, because we can fully control how much is being converted when. And so we can take a couple different approaches with this. We can either enter a dollar amount for each year, or we can have it be calculated based off of a percentage of the start year's account balance. Or we can do a percentage of the annual account balance. So taking the balance each year and using that specified percentage to calculate those Roth conversions, or we can model fully depleting the account over time. And so for this instance, we're going to be modeling 50,000 coming out of Michael's 401k. We're going to keep the owner to Michael. We're going to keep it to 401k. And we're going to have it start this year and end after 3 years. And the important thing with this distribution card is that you want to make sure that you're specifying the type of distribution. So it's going to default to normal distribution. We want to change this to convert to Roth IRA. You do have the option to model rollovers to IRAs or 401ks or NUAs. But for now, we're going to click on the convert to Roth IRA. Another aspect of this card is that you can also control taxation. This is pretty important for if somebody is going to be an exemption for any of the normal standard taxation rules. So when we click on this dropdown, you do have the option to model it tax-free. This is applicable for if somebody is going to be an exemption for, any sort of 59.5 penalty-free scenarios, or if they have any sort of just unique exemptions, you can specify taxation here. For the Scots, that's not the case. They're going to be following standard rules. And let's also put an increase here, 6%. Hit save. And then we can see that impact to their plan. But we also want to add one for Holly as well for her 401k. So let's click back on edit, add new items, income, distribution. And so what I'm doing is I'm just taking that information, that tidbit that I had seen back in the Roth conversion module specifically, and I am taking that information to kind of theorize just another alternative path for modeling these Roth conversions, because we're really trying to maximize their options in terms of what they might feel most comfortable with, because they're a little bit hesitant about performing the Roth conversions, but we want to make sure that we're still addressing their concerns, but also showing them the best possible paths for them. And so with this distribution card, let's also model 50,000 for Holly. It's going to be a fixed dollar amount, owner to Holly, and it's going to be from the 401ks accounts. Have it starting this year and end after 3 years. Also going to do a bit of an increase. Important thing, remembering, convert to Roth IRA. Let's hit save. And then you can see that impact. And let's rename this so that way we know it's Holly's And so as you can see, you can click back into the card by clicking on the title, and then we can start to change the parameters. So just so that way I know when looking directly at the action items that we're looking at the Roth conversions. And so then we can see that impact here upon their probability of success. But more importantly, we can also look at a nice visualization here in the retirement analysis as well. So this is pretty key when we're looking at something like Roth conversions. A really common question is, what am I paying in taxes compared to not doing Roth conversions? And so a lot of those common questions can be answered here in this comparisons tab specifically. So under comparisons, the first thing we're going to see is comparing our scenario of the manual Roth conversions versus the current plan. We're going to see the invested asset comparison and how much we're going to have more pursuing these Roth conversions, but we can also look at specifically taxes. So we can see how much is paid in total taxes over time between these two scenarios. And so we can see if we perform these manual Roth conversions, we're going to have less taxes over time. And so we can highlight this specific key right here to see that with manual Roth conversions, and it's probably going to be with the RMDs, I'm going to guess here, is that we're going to be paying more upfront for taxes, but we're going to have less taxes over time. As we can see, it steadily increases. We have RMD age kick on, and then we're just increasing that taxation. So saving some taxes over time can answer a really, really common question here. We can also view the side-by-side comparison between the net worth between the two scenarios and also the assets at retirement, which for them is not going to be any different, but we can see that there are differences between the two plans. And so going back into the probability tab, let's go over to our Roth conversion strategy. And we can start to pull in that distribution proposal. So back on tax distributions, if we wanted to apply that here, we can take a look at how that would impact their plan by going into distribution strategy from the strategies list. Let's activate the distribution proposal. Let's set these Roth conversions to 0. Let's hit refresh here. And then we're going to see that impact upon their probability of success. But we can also view a side-by-side comparison between this Roth conversion strategy and our manual Roth conversions. And so this is a nice way to have that dynamic conversation of which path should we pursue? Is there going to be any difference between the probability of success, which is going to be looking at the 1,000 trials of Monte Carlo simulations, which are the 1,000 trials of market volatility, and whether or not those trials are making it to the end of plan without running out of money. As we can see, 93% of them for both scenarios are making it to the end of plan without running out of money. There is some light exposure here, but we can also go into the comparisons tab here. And under the comparisons tab, we can do a little bit of a deeper dive. This is going to be pulling from the cash flow information. So this is going to be a straight line projection here, a different calculation than probability tab, just to note. Here we'll see that invested assets comparison, but we can look at the taxation comparison, which one is resulting in more taxes. So Roth conversion strategy 2.0 is going to have less in total taxes than our manual Roth conversion strategy. So maybe that specified 3-year conversion is not going to be saving them in terms of taxes, but maybe it's something they're more comfortable with. But this is how you can do that side-by-side comparison of which path has more or less in taxes, and the same thing with invested assets over time. Another key thing that we can do if we wanted to model some additional Roth conversion scenarios, going into our proposed plan here. Let's zero out these Roth conversions. We could also see here if we wanted to, so right now the current plan / proposed plan is going to be 91%. We can also view a little bit more of an aggressive conversion strategy. So let's say going back into the edit button, add new items, income distribution. So let's say we wanted to take a little bit of a different approach. So barring the 24-28% tax bracket, one of the conversations that were being had was potentially Michael converting his entire 401k into Roth over time. And so let's say that, he was comfortable over the next 15 years slowly converting his account. We can see what that looks like because we can go into this card and specify deplete over a number of years. We can keep the owner to Michael, keep it to 401k accounts. We can have it start this year. And then let's change it to convert to Roth IRA. Let's hit save. And so we can just see that difference in that impact here. And so it's not going to be too much of an impact, but we can see how that looks when we're looking at just probability of success for proposed plan. But we can also view those different comparisons in terms of side-by-side comparisons. And so one of the things that I want to note too is that we can also analyze different sort of saving scenarios. So some of the things that they were looking at was potentially doing backdoor Roth savings. So barring maybe some Roth conversions, they wanted to highlight maybe just saving naturally more into the Roth bucket instead of maybe doing Roth conversions. And so going into the proposed plan, we can view the difference between those two. So when we're looking at the proposed plan, we can go to the action items and we can start to propose that kind of savings. So let's zero out this depletion of the account card. As a matter of fact, we can just remove it altogether. Let's hit delete. And then we can click on the edit button, add new items. Let's go to savings. And then we're going to highlight the backdoor Roth IRA savings card. And so on that same vein, we're going to be looking at the idea of Michael's really willing to kind of reprioritize and start to save more with this backdoor Roth IRA card. So let's say for Michael, instead of just taking the annual dollar amount, we want to just show him making maximum contributions. He's also looking at potentially reprioritizing his current savings, but let's keep it to maximum contributions for now. And we can have that end at Michael's retirement. Let's hit save. And then we can start to view that kind of comparison. But let's say we also want to look at potentially Holly also making that sort of backdoor Roth IRA savings. So let's say she's got a little bit of a different opportunity. We wanted to illustrate that impact. Let's add one for her. But let's say she's going to take a different approach. So if we go to add new item savings, 401k, we can add an after-tax 401k, and we can do some mega backdoor Roth conversions as well. So with this card, we can change the owner to Holly. We can specify the dollar amount, but we can also do a percentage of salary income or a maximum contribution. But let's say for them, she's comfortable with $4,000 a year. And we can tie this to Holly's retirement. No increase, and you can specify that it's going towards the Roth IRA. One of the key things with this card in specific, with this kind of backdoor Roth contribution, you want to specify the conversion year. So you can either do a specific calendar year, or if you wanted to do it annually via in-service withdrawals, you can keep that selected. But if you wanted to have it all occur 1 year, this is how you'd go to change it. For Holly, we're going to leave it to just annually. We can hit save. And we can see that impact upon their probability of success. and how it's going to be changing things for them. And that's kind of how you can model one of those very common scenarios too about, maybe we're not going to be doing Roth conversions. Maybe you want to just look at saving more into the Roth bucket and how that might impact us rather than taking what we have in the 401ks and analyzing that instead. So let's go to the manual Roth conversion strategies, for example. And let's compare the Roth conversion strategy. So that's how you can just kind of leverage that aspect and make these multiple proposals and analyze those side-by-side comparisons. When it comes to presenting within RightCapital, one of the great aspects of RightCapital is everything can be customized and tailored as a template. So if we go into the 3 dots in the right-hand corner and in report, one of the things that we can create is report templates. And so, for example, I already have one that's created as a report template that's gonna be analyzing Roth conversions. But if we needed to create a new one, we can click on all the different ones we want to populate here. We can kind of curate it and fine tune it directly here in this report section as well. So let's say we wanted to highlight what their tax allocation is today. We wanted to highlight the retirement analysis, but we do want to also tie in the distributions module and also the blueprint specifically. We can incorporate this and click download selected pages to download that report, but we can also save as a new template directly here as well. And so we can just rename the template right here. Let's hit save. And then we're going to see that as another option for the template for just creating that report. And this is how you can create that PDF deliverable of the Roth conversion analysis. And it's going to highlight, a lot of what we highlighted today, tying in their current tax allocation. We're also going to look at that side-by-side comparison. We're going to see the difference in action items, but it's also going to highlight all the different savings opportunities here and everything that we were looking at previously. So this is one of the great ways you can utilize that kind of take-home packet. You can provide that either in person or just as a kind of reminder of what you went over in the meeting. One of the other great aspects of presenting within RightCapital and just really fine-tuning your flow of presenting within RightCapital is going back into the advisor portal. If we look for the Michael Scott family, we can navigate into the Planning Access tab right here. And under this Planning Access tab, one of the great aspects is we can always use this open and client access mode as a nice client presentation mode, but everything that we're going to see in that client presentation mode is going to be drawn specifically from what we check off here in Planning Access. And so I already have a template created, so let's just select it from this drop down. But if we needed to modify anything, if we wanted to change the flow, so let's say we don't want to cover the snapshot specifically, we just want to highlight, the current tax allocation. We want to highlight just the analysis, the distributions, and let's simplify this profile approach. Let's only look at the blueprint. Let's hit save. And then if we go into open and client access mode, this is a nice way to present within RightCapital. As you can see, this is going to be a more focused conversation. It's going to hit the points that we wanted to talk about in this meeting. So we can have it be fully controlled via that Planning Access tab here. For example, when we go to retirement, we're only going to see the analysis because that's what I've selected. And so you can have that nice focused conversation directly here and leverage this as a tool to have a more nuanced conversation. And another aspect of this particular mode is that, as you can see, we no longer have the chat bubble populated in the right-hand corner. That's because it's going to be disabled during this client presentation mode. So it's going to be an uninterrupted presentation as well. So just one of the little perks of utilizing this particular mode. But it's just going to also provide a little bit more of that honed conversation. And you can still address all the conversations that a client wants to have within this presentation mode. So it's one of the great aspects of really leveraging some of the nuances within RightCapital.